Okay, that was quite a start. We will get started now with the content. This is the Business Express series, and we'll be talking about how to improve your personal and business credit. I'm going to introduce myself for just take about a minute if you don't know who I am. My name is Shashank Shekhar. I'm the founder and CEO of InstaMortgage. We have been named one of the fastest growing mortgage companies in America by Financial Times, Inc. 500, and US PAC as well. We were one of the past winners. I saw in the chat that Paisan posted that there is a Fast 100 nomination which is open. So I'll highly encourage that if you think you fit the bill, that you should apply. It was quite an experience for us winning it a couple of years back. But on that note, I'm going to start sharing my PowerPoint and just some housekeeping here. The presentation is kind of split into two sections. We talk about personal credit first because that kind of lays the foundation for business credit. A lot of principles are the same, both within personal and the business credit. So it helps to start with that. And then we will move over to business credit. You can type in questions anytime that you want in the Q&A or chat. I may not look at it all the time. I will probably come back to it towards the end. We'll give you a few minutes for me to answer those questions. But feel free as I'm talking, if something comes to your mind, feel free to drop that in the chat, and the US PAC team will be looking at it, and I will of course come back to it towards the end and answer those questions for you. Okay, on that note, I'm going to start my sharing my screen here. Give me one quick second. Okay, I think we're ready. Okay, just give me a thumbs up if you can see the slides. Just want to make sure everyone can. Okay, looks like you can. I don't see anyone saying no, so I'm assuming you are. Okay, very cool. So again, the topic is understanding and improving personal and business credit. So it's if you think about it, it's two different things that we are talking. We want to first make sure that you understand how personal and business credit works, because of course, until you understand it, you will not be able to improve it. I have worked personally with thousands of both customers and business owners in terms of talking about this. My quote on credit has been featured on publications like Forbes and the Washington Post. So you probably know that you're not wasting your time and listening from somebody who actually understands this. The first part, as I said, we will talk about personal credit because most of you must have some experience. Some of you might even have a lot of experience in managing personal credit. Also, it's slightly easier to understand because you have had experience with this. And then once we have laid that foundation of what the personal credit looks like, then we will build on top of it and we will talk about the business credit. So let's start with some of the basics first. There are three different bureaus that manage or report your personal credit, and they're called Experian, Equifax, and TransUnion. And their scores tend to be different. They have a lot of models, and it gets very confusing. The most amount of confusion that I usually see in my personal experience as being a mortgage lender is clients coming to me and saying, oh, I think I have an 800 score or a 780 score. And when we pull credit, we see, I don't know, 720 or 680. And they're very surprised, not in a pleasant way, as you can think, because they thought their credit score was much higher. And then they come to apply for a mortgage only to realize that their credit score is lower or much lower in some cases. And that's because what they don't understand, and some of you may not as well, is that there are different scoring models. And all three bureaus, as you can see on the slide here, use multiple different models. And those models tend to be confusing is because their results are different. So for example, if you went to a car loan company and asked and requested to get approved for an auto loan, your credit score might come very different. Again, if you were applying for a credit card, your score might be different. And then you come to us, like company like InstaMortgage, and then your score might be different. And that's because the risk for different kind of debt is determined by different kind of models that these bureaus run. So Experian, as you can see, runs FICO score 8, but it also runs Two, similarly, as you can see, and you don't have to memorize this in terms of which bureau runs what model, but what is really important for you to understand is that your scores might be different depending on the kind of debt you're applying for. And that's one of the reasons why you should get pre-approved for certain things, especially for a very important transaction like mortgages, is because if you are dependent on, say, the scores that you are seeing online somewhere, and then you go to apply thinking that you have a 760 or a 780 credit score, only to realize it's 720, and now you have to buy the home next week, you're probably behind the curve by then. And so first, understanding that there could be different models. Second, getting yourself pre-approved early enough so you know that your credit score is good enough, or if it's not, you have the time to fix it instead of waiting until the very last moment. And that's the most important reason for understanding that there are different scoring model. I wrote a blog post once which said, when your credit score is not your credit score. That basically meant is that what you see online or what you see from alerts that your bank sends or your credit card sends doesn't always mean that's your score when you're applying for a mortgage. So hopefully that provides some clarity if you had some confusion on that. How come I see different scores? Or how come my mortgage company says my score is lower when I'm seeing a different score? They're not trying to cheat you, let me tell you. That's just how the scoring model works. Now, in terms of credit score ranges, they tend to be the same for all bureaus. It's typically in the 300 to 850 range. And I think it's pretty understandable that anything under, I would say, 660, 670 tend to be a poor score. We can call it poor or fair. Once you start going over that, you tend to get into the good or very good range. Again, depending on what you're looking at, even in mortgages, we even consider over 740 or 760 as excellent. It may not be exceptional that you're seeing on the screen, but we still consider it excellent. Beyond a point of time, again, it's not probably that important whether your score is 800 or 820 or 840, because the kind of the rate that you will qualify for, the kind of loans that you will qualify for, the kind of debt you will qualify for will all be the same. So it's after a point in time, in terms of credit score, it really doesn't matter where you sit. So if you're exceptional or if you're excellent, it doesn't matter whether you're sitting at 760 or 780 or 800. All of that is good. But towards the lower side of the credit score wagon, it's really important. Every 20 points can really swing the kind of interest rates you may qualify for, and sometimes even the loan programs you qualify for. I'm talking about mortgages, but it applies to practically everything. A 720 person, for example, can get a very different kind of interest rate on credit card than say what a 760 person can get. So it's Vantage score is another. So we showed you three bureaus here: Experian, Equifax, and TransUnion. Vantage is a new scoring model that has entered the market in the last decade or so. It was just approved earlier this year to be used even for mortgages. So you will hear probably more and more of Vantage score. And what is good about Vantage is that it takes a lot of your rental credit history into account. And so it's being said that a lot of people who could not qualify for debts like mortgages before, because their credit score would not show, say, a positive rental history, may be able to qualify for mortgages in the future, because Vantage score will be able to show a pretty good score even for them, and even some of the utilities payment that you might be making. So these are encouraging signs for credit score, especially for people who are trying to build. And if you're not in that bucket, maybe you have children who were growing up and will probably be in that age range where they will benefit from some of these things, where say people of our generation growing up would probably not have a great credit score until they were, say, in their late 20s or early 30s, because they had what is called a thin credit score. But these days, because of Vantage, because of FICO 10T, some of the things that was not counted for credit scores before are now being counted for. So these are good signs, as I said. Before I get into what impacts credit score, I first wanted to kind of clear the myth on what does not impact credit score. Because people are like, okay, I'm not employed, does that impact my credit score? Or I make $1 million a year, or I make only $50,000 a year, does that impact? All of that, or how much money you have in the bank, or do you have a bank account or not? All of these have no impact on your credit score. So everything that you see on the screen right now has absolutely no impact on your credit score. There are two asterisk mark here: rent and utilities. I just talked about that on the earlier slide. If it's reported, it does have an impact, but most of the bureaus are still kind of getting into the mood of reporting it. So we are not there yet. And so all of these have no impact. So understand that a billionaire or somebody who just started working in terms of income or assets will have no different credit scores if everything else was equal for both of them. So this is a good understanding, because I do get a lot of questions on things like whether my income or my employment status, or how many bank accounts do I have, or how much money do I have in the bank. None of that has any impact on your credit score. These are what actually impact your credit score. And this is what you should be understanding. There are really 5 things that impact your credit score. And this is the slide where I'll probably be spending most amount of time trying to explain you what it works. Payment history is probably the most obvious of them all. If you take a debt and pay it on time, that impacts your credit score the most, both negatively and positively. Meaning, if you miss some payment, you'll be surprised. Sometimes you could lose 40, 60, even 80 points with just one missed payment. And that effect of that missed payment will go down over a period of time. But you might wake up one morning, you missed one utility payment, you missed one payment, a small little payment here and there, and you'll be surprised how much score you have lost just on that. And sometimes it's frustrating, disappointing, disheartening sometimes when borrowers come to me and they did not realize they missed one credit card payment of $30, which is not even that material if you think about it. It's a very small amount, but credit bureaus don't look at that very kindly. So payment history, make sure we will probably talk about how to manage it, but keep things on auto payment as much as possible. Amounts owed is the next biggest category. It impacts almost 30% of your score. And what amounts owed means is that in relation to how much amount you can borrow, how much you have already borrowed. So typically, for most people, this applies to credit cards. So let's say if you have 3 credit cards and you have a total, or let's just go with one credit card example. Let's keep it very simple to begin with. And you have a $10,000 credit limit on that. Once you exceed 30% of that credit limit, meaning you go beyond 3,000 that you have charged, and you carry it forward, meaning you have not made the entire 3,000 as payment, you are rolling that over or revolving it, as they say. That's why it's called revolving credit to the next month. That'll have a pretty significant impact on your credit score. So if you have credit cards, the strategy, of course, is to have to see if you have multiple credit cards and if you can keep the spend on every card very low. In most cases, if you're trying to get a mortgage or a debt, try to keep it even under 10%. But definitely under 30% is what is the recommended amounts that you should be owing. Length of credit history is not something that you impact, that you control in some cases, because, I mean, for example, when I came to the country, I was an immigrant. I could not have impacted or controlled the fact that my length of credit history when I came to the country was nothing, because I was new to the country. But once you can start building your credit, you should take that initiative of building it as soon as you can, because the longer your credit history is, the better it is. So you should not be in this mindset as that, oh, I want to buy a car and I have no credit, and so what I'll do is I'll just buy all cash, if you have the cash, that is. You should still take a loan if you can. I know it'll be at a slightly higher interest rate, but over a period of time, it actually benefits to even pay slightly higher at the beginning of your credit history, so that you can build that length of the credit history. New credit is 10% of score, and that's usually negative. So what it means is that if you are taking a lot of new credit bureaus think that you are a risk. Meaning, why are you going and applying for, say, a credit card here, and a car loan there, and a mortgage? So if you're taking a lot of new credits, bureaus don't see that favorably. It seems they think that you are some kind of financial trouble, that you have to go and borrow so much money all the time. And that's why even when you take a mortgage, you will see that for the first month or so, you might see a little dip in your credit score, because the old mortgage has been paid off and the new credit shows up on your credit profile. And that's why I say sometimes saving $50 in a store is not worth it. So every time you go to Macy's and Target, and so if you have every store card that you go to because you could save 10% on your purchase, that's probably not the smartest idea, because yes, you save 10% on whatever purchase that you made, but it shows as a new inquiry, it shows as a new credit. And every time you're doing that new inquiry, you're accruing new credit that is impacting your credit. So think about it. It's not always about $50 that you save. It may have much bigger consequences, especially if you're in the market, say to buy a home or buy a car, is because you saved $50 there, but now your credit score went down a little. Now you qualify for a 0.125 higher interest rate. And that could mean, I don't know, $5,000 or $10,000 in extra interest. So be very wise about it. And some of these things, you should be even more wiser, so to say, when you are in the market to take a new debt, because that's when you should be even more focused on keeping your score high or making it higher. And finally, credit mix is important is because it controls 10% of it. But what credit mix does is that what it means is that do you have a good balance of installment and revolving and even a mortgage kind of a credit mix? Meaning, do you have credit cards? Do you have card loans? Do you have mortgages? And the reason why credit bureaus like it is because they want to see, can you manage different kinds of debts? So are you really good at just managing, say, a mortgage, which is a very critical kind of a debt. You don't want to be thrown out of your house. So we understand that you will pay a lot of attention to paying your mortgage payment. But are you also keeping an eye on that $30 credit card payment that you used at gas once and forgot about it? So, and that's what the credit bureaus are looking at, is that do you have a good credit mix? And all of these are even more important when you are starting on the journey of building your credit. Once you've had, say, 800 credit, then you pay off your mortgage, probably does not matter much. By then, you probably have 15 years of credit history. You have always made your payments on time. Then probably does not have that kind of a hit to it. But earlier in your credit score building journey, so to say, all of these are very important. So if you take couples, so especially when I get a lot of first-time home buyers or people who are immigrants who have recently come to the country, I ask them to open a couple of credit cards, take an auto loan. So have that mix and use that all the time. So keep it active and then make the payment. So this is probably the most important slide. Of course, the slide before this is important as well. But if you know that these are the things that impact your credit score, then I guess you already know what are the things that do not impact your credit score, which is what I mentioned on the last slide. So moving ahead, how to improve your credit score quickly, right? This is a question. So this question is more about, say again, as I said, you're in the market to get a debt and you want to improve your credit score quickly. So this is not a long-term journey that I'm talking about. Let's say if you need to improve something in the next 30 days, 45 days, 60 days. And we have been able to help in some cases improve borrowers' credit score by 50, 60, 70 points pretty quickly. And that's because of some of the things that I'm going to mention here. Some of these things may apply to you, some things may not apply to you. Pay down revolving balances. We talked about the fact that the amounts owed is 30% of your score. You do not control the payment history, meaning even if you missed a payment, you can go back in time and fix it. Having said that, even with that, we have seen a couple of times where it has been helpful, where you call the bank or call the credit card company, and if you have had a very long-term relationship, it's an outside chance, but it has worked a couple of times where if you've had a long-term relationship with them, you can call and say, look, I have never missed payments in 7 years or something. I missed it because I was out of country or something happened with auto pay or something. You'll be surprised when you make that request. Sometimes they will reverse it and say, okay, we understand that there was a problem. Even though it was not our problem, we are willing to reverse it. So I'm not saying this happens all the time, but something that you can give it a shot and try that. So pay down revolving balances. As you get closer to taking a big debt, try to pay it down, as I said, under 30%, ideally 10%, ideally even zero. The closer to zero that you are, the lesser number of credit cards that carry balances for you, the faster you're going to improve your credit score. Of course, if there is any inaccuracy with any of the negative items, you can dispute it. The bureaus legally have to stop reporting negative impact to that specific account for the next 30 days. 30 to 60 days. And that gives you enough time to close on a transaction. Even if it comes back, at least you have disputed it, got it out of your credit score, and then it comes back, then you can handle it later. But that's a nifty little hack to kind of dispute anything and everything. It really doesn't matter. Because if it's disputed, they will have to pause on it until they finish their investigation on it. Won't work every time, but again, works a lot of times. Ask for credit limit increase. So again, if you go back here and said your percent of amount that you owe is 30% of your credit limit. So let's again take the same example that I gave before. Let's say if you have a credit card of $10,000 balance and you have $10,000 credit line and you have 4,000 balance on this. So you're at 40% credit utilization. And let's say you don't have the money to pay it down right now. So even though I said put it down under 10% or as close to zero, but you're like, Shashank, I already have to pay down payment and closing costs and this and that. I don't have an extra $3,000-4,000 to pay down my credit card right now. The other hack that you can do is call your credit card company and say, can you increase my credit limit from 10,000 to 12 or 13 or 15? So suddenly, which was 40% of your credit limit now becomes 30% or 20% because you did not change your balance, but you have changed the credit limit that was there on the card. So a $12,000 credit card limit will suddenly make it 33% credit card utilization versus 40%. This is for someone who's probably starting out more so, but becomes authorized users on someone else's card. So I don't know, your sibling, your parents, your spouse, somebody else might have a credit card that they have had for 7-8 years, clean card, meaning that they have never had lates on it. So it has some really good points. It has very low utilization ratio right now, meaning their credit card spend is very low compared to the credit limit. You can become an authorized user on that card, and all the points associated with that card will also flow to your credit score. So something that will help. Pay off a small collection is both good and bad, and I'll explain why. Is because, of course, you should pay off your collection, but one of the things that you should do, and this has worked several times. This is not just one of those things that I said before, which is call your company and say they will reverse the late. This trick works, I would even say, more than 50% of the time. So usually collections, what happens is that if you did not make payments, whether it's medical or anything else, it gets passed on to a collection company. A hospital does not have the time to collect on the debt which has gone bad. They're not going to call you 10 times a day saying, hey, pay your money. So they move it to a collection company. And collection company usually buy these things at pennies on the dollars. Meaning if you did not pay $100, they will buy that for, say, $20. Because they think that, because the hospital thinks it's almost written off, they will be okay with that. So when you call these collection company, you should say, okay, I'm willing to pay off this, but only on the condition that, one, of course, I won't pay $100, makes no sense. I'll pay you $50. And two, that you'll be willing to delete it. So there are two things. One is collection paid off. It still shows on your credit report. So it will show that you had collections and now it's paid off. The other thing which you can negotiate, which is what I always recommend my clients to do, is that you should be willing to pay even more than 50. Like if they say pay 70 or 80, do that on the condition that they will delete it. So they will report it to the bureaus that this account is being deleted off of the credit report. That takes all the negative numbers that you collected on that collection completely out of your credit score. That can jump your credit score by 60, 70, 80 points in some cases when you're able to do that. And why would a collection company do that? Because all they care about is getting paid. Because they bought this debt for 20 cents on a dollar. You are willing to pay 50 cents, 60 cents, 70 cents. That's a lot of money for them. They don't care whether it stays on your credit report as paid off or deleted. And once you get that letter, even if they don't delete it, you can send it to the bureaus and they will delete it because you have the letter from the collection company agreeing to do that. So hopefully these hacks help, especially when you're in the need to push up your credit score quickly. We have done it literally hundreds of times, all of these things, and most of those things really, really work. Now, one tool that's very powerful to add some of the payments that's not being shown on your credit report right now. So imagine that you never had a mortgage and probably only had a card or two. And so your credit profile might be what is considered thin, meaning you don't have a lot of credit. But if you use Experian Boost, so if you go to Experian Boost, I think it's experianboost.com or experian.com/boost, they will help you add your utility and telecom payments to your credit profile. And that can, again, boost your credit score sometimes by 20, 30 points if you've had clean payment histories on those. Okay, these are practices just for if you already have great credit or good enough credit. These are some of the practices to maintain long-term credit health. Some of these are pretty commonsensical. We talked about this. Keep utilization low consistently. And I'm talking about credit card utilization here. Never close your oldest credit card. A lot of people, when they become richer, so to say, is that when they were a student, they had a $500 credit line on a credit card. When they get a job and they're like, oh, I don't need this $500 credit card. Who uses that? Now I have a fancy $5,000 credit card limit or something. Understand, the older the credit card, the more brownie points, so to say, you have on that credit card. You should not be closing them. You should keep it for as long as possible. Even if you use that once or twice a year, that's good. And that's what I'm saying here. Keep accounts active. So just by keeping your old credit card means nothing, because after a point of time, it will be reported as inactive. So you should be using it every 2 to 3 months. Even if you use it for $20, $30, does not matter what charge you're doing. Set payments to auto pay. We've talked about hard inquiries. Just to get a store card to save 10% on a purchase, don't get into hard inquiries as much as possible. And of course, monitor your the credit report. There are tons of services that are available. Your credit card company will do it. Your banks will provide that monitoring tips. And there's Experian, Credit Karma, MyFICO. All of them have apps, have services. Very low cost service, really, for something as critical as this. I mean, if I have to pay $29 or $19 to manage my credit score, which probably is the most important number for anyone living in the US, that's probably not too much to ask for. And all of that will set up alerts for anything that flags new accounts, credit inquiries, and you did not do it, you'll be able to flag it and you'll be able to stop it. And of course, the law allows you to access your credit report annually at annualcreditreport.com for free. Now they don't just provide annually, I think they provide it monthly post-COVID. So you can pull it as many times as you want. It does not impact your credit when you pull your own credit. It does not count as credit inquiry. So that will be perfect. Okay, on that note, we will have our first poll. And I'll have Danny kick that off and see what you respond to that. And then we will get to the business credit part of it in the next, say, 10, 15 minutes. Okay, so in comparison to the start of the session, how confident are you in building or improving your credit? Okay, going to move on, unless we plan to show the poll results right now, maybe towards the end. Okay, so we head to the second part of it, understanding and improving business credit. And as I said, we have built a very strong foundation by talking about personal credit already. There you go, 57% feel extremely confident and 29% feel more confident. 14% still not feel confident. So hopefully we will be able to tackle that with this new section. So business credit is the difference with personal credit score is that the scores are public. Your personal credit scores are not public. The business credit score is public. Anyone can pull that business credit. Payment history and vendor relationships really matter, and even industry classification influences risk. So what kind of industry you are in, what kind of business you run, that will also have an impact. Slightly different, Experian and Equifax are also players in the business credit score. Even TransUnion it's a newer entrant, but really the market leader in terms of business credit score is Dun & Bradstreet, DNB in short, and their score is called Paydex, which is in a range of 0 to 100. And that's the most commonly used. You'll be surprised, even though Experian and Equifax and TransUnion are big players on the personal credit report, they are rarely used, or they're very much less used on the business credit score. Dun & Bradstreet really is what is used. 7 steps to build your business credit. Of course, you have to formally establish your business. You are on this call, so I'm hoping probably you already have a business. Of course, you have probably opened your business account. The next step, next 3 or 4 steps, of course, is more important. Get your DUNS number. So Dun & Bradstreet has a number called DUNS number, just like we have Social Security number, which is attached to our personal credit report. DUNS number is what is attached to your business credit report in most cases. You can get a business credit card. You can establish a line of credit. Of course, you pay your bills on time, and you should monitor your credit report. So that's why I'm saying some of the factors or some of the reasons the way the credit score works, it remains kind of same as the personal credit score, because as you see, it's just the only difference is that instead of taking personal credit card, we are saying get a business credit card. Instead of taking a personal line of credit, take a business line of credit. But paying bills on time, monitoring your credit report, all of that kind of remains the same. You will again see very similar kind of factors that impact your business credit score. Payment history, again, is the number one factor. And that, again, makes sense. If you've taken a debt, are you paying it on time? Everybody is looking at it because at the end of the day, what does a credit score really mean? A credit score, all it means is that what is your uh, chance of defaulting on a certain debt? That's all that the credit scoring models are looking at. The higher your credit score, the lesser your propensity to default on a debt. The lower the credit score, the higher your propensity to default on a debt. That's all they are looking at. And so it makes sense that your payment history is the number one factor in which you can by which you can improve your credit score. Credit utilization, we talked about the same thing with personal credit score. Length of credit, public records, again, just like in personal credit score, you can see bankruptcy and foreclosure. By the way, that does not always have direct impact, but that will also have an impact here on the personal credit score. But this is what I was saying. Sometimes industries like healthcare might have a financial services of some kind will have higher industry risk rating than some of the more stable businesses. Managing your business credit is it's similar in terms of what the personal is with a little bit of difference. Of course, you need to have your strong cash flow to avoid mispayment. Also understand that you should take a credit, like let me go back here and say get a business credit card or establish a line of credit. So the time to get business credit is when you don't need it. And I'll explain what that means is that when you don't need it, it means you're doing well, right? You're financially doing well. Your cash flow statement looks good. Your P&L looks good. Your balance sheet looks good. And you're like, why do I need to take a line of credit right now? But that's the time when it's easier for you to qualify to get one. Imagine when you get to a bank or to a credit card company and say, hey, I can't pay my next month's payroll and I've just had $50,000 loss and my net worth is negative. Will you lend me some money? And what do you think their answer will be, right? And because if you take a line of credit, it doesn't hurt you other than maybe small little fees here and there. But if you keep it as a security, so to say, so if you have problems with managing your working capital or your payroll next month, you can dip into that. You can dig into that and use it. And so that's a really important point because most people don't think about taking a debt when they're doing well, especially on the business side. But that's the time you should take a debt. Take as large as a debt as possible if it does not have a carrying cost, because who knows, you might be able to use it. You might be able to find another business that you want to acquire, and now you have cash sitting in the line of credit that you can use. So similar reasons here, as you can see, so similar tools and ideas here to manage your business credit. Monitoring your business credit, again, is the same similar thing. Experian, just like Experian Boost helps you improve your credit, Experian also has a terrific business credit management program or monitoring program called Experian Business Credit Advantage. You can subscribe to it. It tracks your real-time business credit, alerts you for changes, any kind of fraud that they see, and of course, you get full access to your business report along with recommendations. Also, in terms of just quickly, in terms of line of credit or even the vendors that you choose to pay bills, some of the vendors report your payments to the credit bureaus. So companies like Quill, they will report it. Staples would do that if you had a business account. And so you should check. Sometimes if you're evaluating two different vendors and deciding where do you want your supplies from, check with them. Hey, do you report my payments to the credit bureaus? Because if they do, and they are offering kind of a similar terms, then you probably want to go with a vendor that reports your payment history to the credit bureaus. So that's all I had in terms of improving and managing your business credit. As I said before, we started, they look similar, but once you understand the fundamentals of the personal credit score, it's much easier to manage the business credit. As the first step, of course, is to get your DUNS number. And once you have that, get a couple of accounts in your business name. And it has a lot of value, of course. Once over the time you build it, you will get much better credit rating and the kind of terms that you will get on your credit. So the QR code here links to my LinkedIn account if you want to connect there. If you have any questions, I'm happy to answer it via email at shashank@instamortgage.com. And we will open two more polls at this point in time to see what your understanding has been for this class before we jump into the Q&A. Okay, I think we have one more poll. Okay, much better. So no improvement at all has gone away, which is great. Great to see people voting in the top two of this. So I'm happy that it has made some impact there. And do we have one more poll to roll? There you go. Apps like Experian, Credit Karma, or MyFICO. I know I did not actually showed you the app, but told you what are the uses of this app and how you can use it, and why you should be using it, and why the cost on this is probably minimal compared to the kind of benefit it provides you. Okay, let's share the results of the last poll of the day, and then we're going to move into the Q&A section. There we go. Very cool. Very nice. Okay, I'm going to stop sharing my screen and let's look at the questions. What do we have? Okay, Python, tell me if this is a question. What's been your biggest challenge with building business credit? Is that a question?
We have a questions from the chat from
Okay.
Michelle. Where can you pull a free business credit reports?
So if you go to Dun& Bradstreet, they will be able to do that. You are able to, but again, as I said, you need to have a dunce number, Michelle. So if you don't have a dunce number, then you don't have a business credit per se, because just like the social security number is attached to your personal credit, a dunce number is what is associated with your business credit. So if you're starting out, you should first go to Dun& Bradstreet, get a dunce number for your company, and then you'll be able to see your business credit. How can someone solve their late payments on the business side when it shows up on their credit report? Is DUNS the same as business EIN? So I'll take the second question first. It is not. So business EIN is your federal identification number, also called FEIN. And that's a number that you get when you form a business. So your business has to have an EIN for it to be formed in the first place, because that's how you file your taxes with IRS. That's different than the DUNS number, which I said you go to Dun and Bradstreet. I might be dunandbradstreet.com, but you go to Google and say, get me a DUNS number, or Dun and Bradstreet DUNS number, and that's a separate number. That's not business EIN. So I know with your personal credit, your social security number is what you use even when you file tax returns. And that's why probably you're thinking it should be the same thing, but not in the business case. The business EIN is different than the DUNS number. And solving for late payment on the business side, again, is really there are two things. One, if it's reported wrongly, you can dispute it with the bureau that is reporting it. So if DNB is reporting it, or Experian or Equifax, you can dispute it. If it's being reported correctly, then as I said before, it's a very, very, very hard task. You're probably 1 in 100 shot of calling the vendor who reported it late. And if you've had good relationship with them, you can request that they can request the bureaus to remove it based on your relationship with them. Or maybe you are planning to have a long-term relationship with them, and this could be part of your negotiation tool. Hey, I'll use your supplies for, I don't know, for the next 2-3 years, but I really want this late payment to go away because I'm planning to apply for other debts or something. So that could be useful. Question from DM. I understand having a good credit score and how to get it now, but what do I do with it? Okay, very cool. So again, depending on if it's a question related to personal credit score or business, but both of them have the same use. Two things. One is all of us have some point in time taken a debt or plan to take a debt. It's very hard to manage the entire life purely on cash, meaning anything and everything that you want to buy, you have the money in the bank to pay for it. And so we all end up taking a debt at some point in life, sometimes multiple debts. And what kind of debt you get, meaning that what kind of terms you get on that debt, mostly the interest rate and the fees. One factor, not all the factors. Credit score is not everything that a lender looks for, but credit score is the most important thing, or one of the most important thing that the lenders will look for in terms of terms. And sometimes you won't even qualify for that debt, let alone getting into even the discussion of what your terms will be if you don't have a certain kind of a credit score. So it's important for both, first qualifying for a debt, and two, getting good terms on a debt versus not getting as good a term that you would have liked to do with it. So that's what you do with the credit score. Does my personal credit score affect my business? It does not. And by the way, one of the mistakes that some business owners make, especially if they're very small business owners, meaning they're solopreneurs or they run a very small shop, they just put everything, like they just get another personal credit card, and they're wise enough not to put their business spend on the personal credit card, but they just have two credit cards, one for personal or other credit cards for personal, and they get one that they use just for business stuff, which is fine, but it does not build your business credit. They are still being reported on your personal credit report. So I would say that that's one of the mistakes that most business owners make. So even if you're small, if you have a bank account, almost every bank account, every bank has a credit card as well. So with ours, for example, we have business banking account with a couple of banks. We have credit cards with both the banks. So they will give you a credit card, especially because you have already money in their account. Even if you have $3, $4, $5,000, they will give you a credit card, and that's the credit card that you should be using instead of your personal credit card. But one does not affect the other. So if you have a really poor personal credit score, you can have a great business credit score, or vice versa. Okay, how quickly can improving business credit impact a company's ability to access funding or better loan terms? So improving business credit, first of all, even if you're starting afresh, even if you have say, one credit card or one line of credit or a couple of vendors who are reporting your payments to the bureaus, sometimes you can build credit in as little as say 30 to 90 days. In fact, in most cases, you should be able to build credit as quickly as that, because almost the very first payment that gets reported starts building your credit. On the personal side, it takes slightly longer, definitely 90 days. Some bureaus might even wait 90 to 180 days to start showing your personal credit score. And that's why if you're young or if you're new to the country, it takes a little bit of time to start showing on your credit report. But business credit actually builds much faster than personal credit. And once you have done that, once your business credit score is being reported, and it's being reported on good terms, meaning you have reasonably high score, then you can use that score to take a new debt, and hopefully on favorable terms at that point in time. Okay, maybe last couple of questions, if we have any. Okay, looks like we don't have any more questions. So on that note, then thank you very much for attending this webinar, which is part of the Business Express series. Hopefully you have attended some of the earlier ones, and I understand there might be some in the future as well, which you definitely should take time to attend. I wanted to thank USPAC and the entire team there for inviting me to talk on this topic. And as I was saying, there is a full playlist that has been posted, and I'm sure they're very, very informative. So hopefully, as the poll showed, but hopefully you understood how to not just understand about credit scores, but how to manage it, how to monitor it, because it is probably the most important number that we have here in the country. So thanks again for having me, and I hope to see you guys soon.